Okay, so good afternoon. Welcome everyone to the online Geneva Trade and Development Workshop, which is a seminar series jointly organized by the CEPR, the Geneva School of Economics and Management, the Graduate Institute Geneva, UNCTAD, and the WTO. For today's seminar, I'm delighted to introduce Beata Javorcik from the University of Oxford, who will present Unravelling Deep Integration Labor Market Effects of the Brexit Vote. As we are the third installment of the series, many of you are already familiar with the format, but let me briefly summarize the main features for any newcomers. The presentation will last 1 hour and will be followed by 50 minutes of questions and answers. During the presentation, please feel free to ask clarifying questions in the Q&A window. With the help of my co-hosting colleagues, I will try to relay them to Beata. So without further ado, Beata, the floor is yours for an hour.
Thank you very much. Let me share my screen. Well, thank you very much for the invitation. It's a pleasure to be joining you this afternoon to talk about unraveling deep integration, the local labor market effects of the Brexit vote. This is joint work with Kett and Katherine Stapleton, who have just obtained their doctorates at Oxford, and with Layla, who works for Burning Glass Technologies, which is the company who collected the data we are using in this analysis. Now, as you probably all know, decades of research in international trade has been devoted to understanding the impacts of trade integration. These days, sadly, we are studying the opposite. We are studying disintegration of various trade relationships. And in this paper, we focus on Brexit referendum. There is a literature, growing literature devoted to the US-China trade war. Now, our paper differs from that literature because we study not actual barriers to trade, but the potential barriers to trade, the threat of future barriers to trade. And while the literature on the US-China trade war focuses mostly on trade in goods, our paper is devoted primarily to barriers to trade in services, the so-called 21st century trade barriers. So the Brexit vote gives us a unique opportunity to look at what unraveling of a deep trade agreement may mean for the labor market. And that's sadly a relevant issue these days because in the post-COVID world, we may be facing growing protectionist pressures. So more specifically, what we do in this paper, we ask, how did the threat of future barriers the United Kingdom may be facing on its exports to the EU, how does the threat affect online job postings? And we focus on quasi-universe of UK online job postings. We look at them from 2015 to the end of 2019. And looking at job postings has two benefits. First, we have data that is quite granular. We can look at developments at the monthly level. And second, job postings bring us closer to labor demand than looking at actual employment figures would bring us. So actual employment figures are an equilibrium income that affected by both demand and supply side forces. Although online job postings do not capture purely the demand side, but they get us closer to the demand side than employment figures. We look at this question from the perspective of local labor markets and how a given local labor market is exposed to potential future barriers. We consider both trade in goods and in services, but just to preview our findings, services is where all the action is in our study. We control for other channels that may be affecting labor market outcomes, such as depreciation of the pound and uncertainty about immigration policy. But it's really the threat to export of services that will be playing the key role here. And in the extension to the paper, we develop time-varying measures of policy uncertainty and show that if we just were to zoom in on the post-referendum period, periods of growing uncertainty are reflected in labor market outcomes. But probably I will not get to that part in my presentation. So to give you a preview of the results, we find that areas that are more exposed to future barriers to exports of professional services reduced online job postings after the Brexit referendum more than less exposed areas. And this impact is particularly strong in financial services. And this decline is concentrated in high-skilled jobs and in professional jobs. So good, high-paying jobs are the ones that are primarily being affected. And when we focus on the time-varying measures of uncertainty, which we proxy by newspaper coverage and by Google searches of the relevant terms, we find again that this reduction in online job postings after the vote is concentrated in months with greater uncertainty. We speak to several literatures. We speak to the literature on trade integration by focusing on the opposite, on trade disintegration. We also speak to the literature that considers Brexit specifically. And here we are different because we focus on online job postings, while the existing studies consider other outcomes. And finally, we speak to the literature, the newly emerging literatures that considers online job postings in other contexts. Now, as I shouldn't take for granted that all of you are familiar with the Brexit timeline, let me briefly review the developments. I think it's fair to say that the United Kingdom has been the least enthusiastic member of the European Union. The EU, or earlier the European Community, was sold to the British public as being primarily about removing barriers to trade in goods. And as EU has gone through greater and greater integration, this was associated with growing unease among some parts of the British society. And particularly within the Conservative Party, there was a pretty strong Eurosceptic wing. And to put these within-party conflicts to rest, David Cameron announced in 2013 that he was going to organize a referendum on the British membership in the European Union. He was so confident about the outcome of this referendum that he even allowed the members of his own cabinet to be on the Leave side, to essentially campaign against EU membership. Moreover, before the referendum, there was very little attention being paid to what the post-Brexit relationship would look like, simply because very few observers believed that the referendum result would come out in favor of leaving the EU. And then on the 23rd of June 2016, a big surprise happened. The referendum, the vote came out in favor of Brexit by a very narrow margin, 52% in favor against 48% against. And then everybody took a big breath. There was a lot of uncertainty of what this vote really meant, simply because very little attention was paid prior to the referendum to what the relationship between the UK and the EU could look like in the event of Brexit. And to some extent, this uncertainty was resolved in July of 2018 when the UK government published its white paper in which it outlined the parameters of the post-Brexit world. And essentially, this white paper said that the government would be very much in favor of free trade in goods, but it was also very much in favor of the ability to control migration flows into the UK, which meant that it had to be willing to compromise when it came to services sectors, that it was understood that UK services industries would not face the same frictionless trade as prior to Brexit. The withdrawal agreement was agreed in November of the same year, and then 3 votes followed in the UK Parliament. These 3 votes failed, which led to change of the government. And under the premiership of Boris Johnson, the UK left the EU at the end of January of this year. So Brexit did happen. Brexit has already happened. Currently, we are in the transition period, which will last until end of this calendar year. It's unclear at the moment what will happen starting on January 1st. So the uncertainty not only was prevalent right after the referendum, it actually continues to be there now.
Beata,
yeah.
sorry for interrupting. I presume you will be covering the period only until the date where the UK is leaving the European Union. So on your previous slide, that was the last, but not the one before the last date. Because then there is another, I would say, important event where the Parliament is voting on a law that might enable them to revoke certain parts of the withdrawal agreement, right? Which
yes, we will not cover that period because our data ends at the end of 2019. But you're absolutely right that that is another shock that perhaps merits some attention. Now, if you were to look just at broad developments in the number of job ads that were posted online in the UK, this is the blue line and this graph seasonally adjusted. You see that essentially after the referendum for about 2 years, there was a continued increase in those online job ads, and then a decline starts. Around that time, the US developments in the US look very different. There is a steady increase in online job ads. Now, let me say a few words about future barriers to services export. So, as I mentioned, the referendum result was unexpected, right? So it's suddenly from one day to another, there is an increased probability of trade barriers. And these trade barriers on services matter very much for the UK because services account for 80% of output and almost half of UK exports. And within services, financial services are particularly prominent. They make up 7% of total output and they contributed almost 30 billion in tax revenues. And the issue here is that, if the UK leaves the single market without an agreement on trade in services, UK will be treated by the EU as a third country when it comes to trade in services, and it will be trading on WTO, or more specifically, GATS terms. And that will be a big shock for many services sectors because EU is the most integrated area for trade in services in the world. So I will come back to this issue in a few slides about what it can mean. Now, as I mentioned, we will take the perspective of local labor markets. So this is akin to Otterdorn and Hansen approach in some of their work. Those local labor markets in the UK are called travel to work areas. If we exclude Northern Ireland, which we do, because of the issues related to Good Friday Agreement, we want to abstract from those political issues. We focus just on sort of the rest of the UK, we have 218 such travel to work areas. And the definition of such an area is the following. At least 3/4 of the resident workforce is employed within the area, and at least 3/4 of people who work there also live there. There is a minimum size of an area, so it must have at least 3,800 economically active people. But in practice, these travel to work areas range in size from 3,800 people living there to 8.4 million. Here is an example of such an area. This is Oxford at the center, and a few towns such as Bicester, Chipping Norton, and Farrington. So it's more than just a small town typically. Now our data comes so in order to say something about how an area can be affected, we need to know the employment structure in that area. And that comes from Business Register and Employment Survey, which gives us employment by location and 4-digit industry code. We focus on employment in 2015, which is the year prior to the referendum. And this data source comes from surveys of approximately 85,000 businesses. Almost 29 million employees are included, and that's about 90% of total UK labor force. We also will use data on migration from the annual population survey, which is the primary source used for that purposes. And we also have information on services trade from the Office of National Statistics. Now, when we want to measure barriers to services exports, we take into account what perhaps one could consider the worst case scenario, meaning the status quo before the referendum relative to trading on the WTO terms. So in other words, we will use trade restrictiveness index pertaining to services, which was produced by OECD, and it will tell us how each country within the European Union treats other members of the Union versus how each country treats WTO members. Now, I talk about European Union, but in reality, we are talking here about the European Economic Area, which is the EU plus Iceland, Liechtenstein, and Norway. Now, this Services Trade Restrictiveness Index is available for 2014, so this is 2 years prior to the referendum. And it is specific to a country which imposes restrictions, as well as to particular services industry. So we focus on professional services, finance, insurance, legal services, accounting, ICT, telecoms, engineering, and architecture. And this index includes restrictions on foreign entry. So for instance, it will capture whether or not a foreign firm can buy any equity stake in a local business it desires. It captures restrictions on movements of people, on barriers to competition, on transparency of regulations. So for instance, it captures restrictions on cross-border mergers, on regulations pertaining to services products.
Beata, I have a clarifying question from Julia Cajal, who is asking about what about exposure to on the import side, because the focus seems to be on exports, but what if there are some intermediate goods or services from abroad that have high complementarity with the services that the UK firm produces?
After the referendum, the prevailing discourse was about keeping the UK a very open, preserving UK status as a very open economy, and therefore not actually imposing many barriers on goods and services. So actually for a very long time, there was a discussion about keeping zero tariffs with the exception of agricultural products. And there wasn't discussion about imposing restrictions on services industries. So we are, when it comes to services, we are actually ignoring the possibility of complementary services. When it comes to goods, we do take this into account. So we take into account potential barriers on imported inputs and potential benefits from protection, but we actually find no action there. Any other clarifying questions?
Yeah, I've got another clarifying question from Celine Carrère, who is asking about the indirect impact of services on the export of goods. So what about the indirect impact through the decrease of local demand of the export services as an input in goods exports?
So in a sense, this would be captured in our analysis, because our analysis will look at job ads at the local level. And then I will try to convince you that if a given locality has faces bigger barriers to services exports, this locality is seeing a drop in all job ads. So if manufacturing businesses locate close to services providers, because these are services they found that are complementary, in that sense, our analysis would capture that. But it's a good question. We haven't sort of explicitly developed a measure of dependence of a particular manufacturing sector on services inputs. Partially, that's because a lot of services inputs that are used by manufacturing are utilities and transport, and these are not sectors that would be affected by restrictions to export to the same extent. So now so as I said, our focus is on professional services. So what we do is, first we take this OECD index. This index is specific to a particular industry and a particular country within the EEA. And we look at the difference between how this country treats WTO members versus how it treats EU members or EEA members when it comes to restricting services sectors. Now, because we have many EEA members, so we need to do this country by country simply because the restrictions are actually not uniform. This index differs across countries within the European Economic Area. So to create an average measure for a particular industry, an average measure of restrictions UK would be facing, we weigh restrictions in each country by UK exports to that country in that sector in 2015. So this is the average increase in barriers to exports in services industry J, UK firms would be facing. Then we want to take into account how export intensive that industry, that services sector is. And to do that, we multiply our average increase in restrictions by number of pounds in exports. And these are exports to the EEA per person employed in that services industry. So this gives us exposure of services sector J to increased barriers to exports in the case of hard Brexit. Now we need to bring this measure to the level of our locality, travel to work area. So to do that, we sum exposure of professional services over all professional services sectors J, using as weights employment shares in that sector, in that locality. So basically localities which rely very much on industries that potentially can face high barriers to exports will have a larger value of this measure. So if you believe, for instance, that financial industry will face particularly high barriers, localities where a lot of people are employed in the finance industry will have a higher value of this index. And just to reiterate that all the values used to create this index pertain to pre-referendum period, so 2015 or 2014. Recall the referendum was in mid-2016. Now, just to give you a sense of the raw data, how big this increase in barriers could be. So if we just compare the index, the OECD index, which ranges from 0 to 1, you see that Poland and Luxembourg have high values of the index when it comes to legal services. So for instance, they require foreign lawyers to take national exams in order to practice within their country. At the same time, these two countries treat EEA lawyers much better. Basically, as the blue bars, the dark blue bars indicate, barriers within the union are much lower. So here, these light blue bars show you the potential increase in barriers prevailing in a particular country, in a particular services industries. And as you can see, it's not just legal services. For instance, in Slovakia, it's the engineering sector where the barriers would increase, as well as architecture, though of course legal profession tops the chart. You also see in Iceland, computer industry is quite protected. So this is not just financial industry that would face the barriers, even though in the press, financial industry is disproportionately prominent. Now, you may be wondering where these professional services are located. You know, most people would think, is it just London? Actually, it's not. You see that Edinburgh and Halifax are the localities that would be affected to the largest extent. London is only in the 6th position, but you also see places such as Northampton, Reading, Bristol would be affected. And if you look at the map, the darker shaded areas are areas that potentially can be affected to a greater extent. You see that they are all over the place. Now we consider the threat of tariffs, so the impact on trade in goods. If no deal is closed between the UK and the EU, the trading relationship will go back to the WTO terms, meaning that each country will treat imports coming from another the same way it treats imports coming from other WTO members. What does it mean in practice? If you consider 6-digit products, almost 40% of products would be subject to tariff above 5%. About 1/10 of products would have a tariff of 10%, and 2% of product lines would have a tariff above 15%. So it's significant. So what we will look in our baseline analysis, we will look at increase in barriers to exports faced by a given industry. However, in robustness check, we will also consider the threat of tariffs on imports and the possible impact of sectors being protected. And it's exactly the same logic as with services. local labor markets are affected differentially by the threat of those increased tariffs, depending on the pre-referendum composition of employment. So basically, because tariffs under the EU are zero, so we look at the average MFN tariff pertaining to sector J. This is ad valorem tariff export weighted. We again take into account how export intensive industry J is. So how many pounds of exports are directed to the EU per person employed in that industry. So this gives us tariff exposure for each sector J, and then we bring it to the level of locality by weighting tariff exposure for each industry by the importance of that industry in employment in a given travel to work area.
Beata, so in this tariff exposure, so you take into account what would be the effect of going to MFN tariffs, which, yes, as you showed on the previous slide, is definitely sizable. But what about the impact of the associated bureaucracy with collecting tariffs? So in the press, you have all these articles about warnings that 7,000 lorries queues will build in front of Kent and things like this.
So that's much harder to capture, basically. So what we do in robustness checks, we take into account non-trade barriers. So basically, barriers where cases where where there are technical barriers or standards, right? But we don't take this explicitly into account because that would be essentially uniform across, to the extent that it's only about filling out customs form, that should be uniform across sectors. So we have basically, perhaps if you have a way of quantifying this, we would be quite interested, but we haven't come up with a good way of quantifying it. In some robustness checks, we also allow for, we take into account employment shares in traded industries, and that could to some extent capture that in an imperfect manner.
Okay, so I don't have any suggestions or how to quantify it, but I agree that it might be uniform on everyone, the delay that they would face in filling up the customs forms, but this delay might affect different products, right? It would have a completely different effect on products that are perishable than...
This is an excellent question. So basically, there are industries where you want to deliver goods on time, either because this is just-in-time production or because products are perishable. It's presumably easy to take into account perishable products. It's much harder, I think, to figure out exactly which industries follow just-in-time strategies, but perhaps that's something we could look into. That's an interesting suggestion. Now, if you look at exposure to export tariffs, again, you see that there is quite a lot of variation, and there is a lot of variation within various parts of Britain. Now, let me say a few words about job posting data. So Burning Glass Technologies, they scrape what they believe is almost the universe on online job postings. They do so on a daily basis. They source from more than 40,000 online job boards and company websites. They say that if an ad for a particular job is posted on the company website as well as on one or more boards, they take that into account. They clean the data so that there isn't duplication. During the period we are interested in, so basically 2015 through 2019, we see about 30 million job adverts in the UK. And they classify these posts by these travel to work areas. Here you see 225, because that includes Northern Ireland, though we don't use Northern Ireland in the analysis. If we compare this to the UK vacancy survey, which is also a survey of vacancies, on average, during the time we capture 86% of total vacancies. Now, to preempt the question, you may ask, why are we taking the perspective of local labor markets as opposed to industries? And there's a very simple answer. It's easy for burning glass technologies to classify job ads as pertaining to a particular locality. And these travel to work areas are sort of a standard administrative unit. It's much harder for burning glass technologies to link jobs to particular industries. And actually, they do try to do it, but they are able to classify only a fraction of jobs. So that's the simple reason why we take the perspective of local labor markets. If you look at job posting data, these are raw monthly figures. You see there is a lot of seasonality, with dips in winter, sort of December, roughly now December, and you see this is the referendum time. You don't see immediate reaction, though in the long term there is quite a decline in the number of ads. Now, in our baseline specification, we relate number of job postings in a given travel to work area, R, so 218 areas in a given month, to potential exposure to trade barriers. So this exposure to trade barriers is specific to a locality because it's based on the composition of employment as well as the potential barriers. And we interact this measure, which pertains either to goods or to services, with a post-vote dummy. So basically we ask, is it the case that the number of job posting changes or goes down in areas highly exposed to potential barriers to exports after the referendum period? Note that we don't need to have the trade barrier exposure by itself because we have travel to work area fixed effects, and we don't need to have the post dummy by itself because we have fixed effects for each year and month. So it's year, month, we have a fixed effects. And we have other controls specific to region and time, which I will mention in a second. And we have two-way clustering, either on period T and on travel to work area. Now there are
Beata, I have a clarifying question from Julia Cajal. She's asking about, you have information, whether the data contains information on the employer on the left-hand side, so which would enable you to disentangle intensive and extensive margin effects.
So the data we use does not. Presumably, it is potentially possible to do that, to access such information, but we start with information aggregated, employment information aggregated to travel to work area. So now there are other factors that matter. One is exchange rate. So if you are employed in the UK, on the night of the referendum, your wage went down because the pound sterling fell relative to the dollar by 8% and relative to the euro by 6%. And this depreciation is a reflection of the fact that the referendum result was unexpected. And of course, pound has weakened since then. I'm not going to show you the results for the exchange rate because there is perhaps a better way of capturing exchange rate movements by using sort of time varying developments. At the moment, what we do is we take information from the work of Swati Dhingra and co-authors, which captures how exposed each industry was to this depreciation that took place on the night of the referendum in terms of its geography of its exports, and in terms of geography of where it gets imported inputs. So we will have one measure for exports and one measure for inputs. And there is variation because depreciation was uneven across currencies. The other channel that matters very much is EU migrants. So a big part of the discussion prior to the referendum was the presence of EU migrants, migrant workers like myself, who are employed in the UK, and the desire to curb migration. So from the annual population survey, which is a continuous household survey and the best data source of information on migrants, we know the share of employment in each UK region and in each one-digit industry. So these are broadly defined regions. We have 11 regions, one-digit industry. We know what's the share of employees who come from the EU, and then we explicitly look at employees from new EU member states. If we, by knowing industry intensity in EU workers at the broadly defined regional level, we can then bring it to the finer geographic unit travel to work area by looking how important each of those industries is in our locality. So finally, some results. What we see, so we enter these variables one by one, and then we will add controls. And what you see is a robust negative relationship between exposure to barriers on professional services and job postings in the post-referendum period. So basically, localities which potentially will face barriers to services exports see a decline in number of online job ads. And as we progressively add controls, the magnitude of the coefficient goes down, but it does not, the significance level does not decline. And as you can see here, none of the other variables is statistically significant. Now, how big is this effect? If you think about one standard deviation increase in exposure to barriers in services, this is associated with reduction in job ads of 3.1%. On average, monthly postings by area are, almost 2,500. So this is a decline of 74 postings per month. So, if we tried to do a back of the envelope calculation and say, what would be the aggregate effect for all of the UK? So here we assume that all of this travel to work area had the exposure score at the 10th percentile. That would cumulatively mean 1.5 million postings that should have been visible, that were not present during the post-referendum period. Just to put this into perspective, the UK labor force is less than 30 million people. So in terms of economic magnitude, this is non-negligible. Now, if you were to trace the impact of this threat of barriers quarter by quarter, this is what you would get. So obviously, as in any diff-in-diff analysis, we are worried about pre-trends. So to shed light, to check if there is any reason to be worried about pre-trends, what we do is we allow for the effects of barriers to professional services be estimated quarter by quarter. This is the referendum quarter, and this is the pre-referendum period. And what you see is that there is no indication of any pre-trends. And then there is no action immediately after the referendum. And that's consistent with the idea that the public was stunned after the referendum result. Nobody actually really knew what will happen next. There was no consensus on what the post-Brexit relationship should look like. And what you see in the data is that the first significant effect, statistically significant effect, appears in the second quarter of 2018. So this is almost, so this is actually 2 years after the referendum, and then the impact stays there. So the question is, what happened during that time? And that, as you may recall, is July 12th, 2018 is the date of Brexit white paper being published. This is the first time when the government spells out in detail what its vision for the post-Brexit Britain is. And the immediate assessment of that white paper is that UK government's preferred path forward will be a real blow for the UK's financial services and related professional services sectors. And that's because during essentially the trade-off that the government is willing to face is it values very much the ability to limit migration, even though it may come at the expense of barriers to services industries. As you recall, the EU throughout the negotiation has been very adamant about 4 freedoms of movement being indivisible. So freedom of movement of goods, labor, capital, and services, right? So, and you know, there is a lot of commentary about this paper being published, but essentially, the paper confirms that Britain would seek a free trade area for goods. Oh, this is free trade, not customs union. But it also sets out plans for a looser relationship on services, including financial services, where Britain would seek the freedom to chart its own path. So Britain wants to pursue its own path when it comes to regulating services as well as when it comes to regulating migration. Let me stop here and ask if there are any questions.
Yeah, so I have a question. There has been a lot of debate about the passporting in the financial services. So do you see any effects related to how the discussion about passporting evolved over time?
So let me perhaps let me come back to this explicitly in a few slides when we will zoom in on financial services. So we address this issue in 2 ways. One is we zoom in explicitly on financial services, and then we have the time-varying measure of Brexit uncertainty, which takes into account passporting as one of the search terms. And we say that the more people are discussing passporting as an issue, the greater the uncertainty. And that translates into greater uncertainty, translates into lower job ads.
Okay, Laszlo Halpern has another clarifying question. Do you observe posting duration? And what about investments, domestic, foreign, and disinvestments or relocations?
So we don't observe duration. So we are not looking explicitly at disinvestment there are papers which have looked at FDI inflows to the UK in the post-referendum period relative to pre-referendum, and they concluded that there has been a decline in FDI inflows. So because this issue has been addressed, we don't look at this, and we have no ability to distinguish between postings by British firms versus foreign affiliates.
Okay, and another question from Richard Baldwin. So you seem to take postings as a measure of labor demand, the number of jobs, but it could also be a measure of a drop in churning separations due to the increased fear of not getting another job. So can you disentangle the two? Or?
Yes, this is an excellent question, and let me, if I can answer this question explicitly. Okay, so what we do is we ask. So we looked at data. This is data from Office of National Statistics on movement out of employment, either to unemployment, these are the blue bars, or to inactivity, so people leaving the labor force. And here we normalize the data by employment. So for each quarter, we look at the average employment at time t minus 1. We normalize it, and then we normalize relative to the pre-referendum period. So for instance, please ignore this. So referendum took place here, and now we ask, how are the post-referendum developments? How do they compare to pre-referendum development? So what you see that these values in some months they are below 1. So compared to the corresponding quarter prior to the referendum, we see decline in movement out of employment, though in some quarters we see increase. So it's a bit hard to see a pattern, but perhaps it's safe to say that there is some indication that people are more likely to hold on to their jobs. The next thing we do a comparable thing, looking at gross inflows into employment. These are the blue bars. Here, this is the referendum period. The blue bars are inflows into the employment, again, normalized as before. And the red bars are outflows out of employment. So what do you see? That inflows into employment are in the post-referendum period are below 1. So there is some decline in people flowing into employment from unemployment. So this is again ONS data. The third thing we do is we look at job flows, at job-to-job moves. So these are people who are dismissed and made redundant, the blue part, people who just resign, and people who retire, the green bar, and people who just give other reasons. And you see that here we have an indication of actually increased job-to-job flows in the initial, at least in the up till the sort of first quarter of 2019. So it seems that what we are capturing is not just people holding on to their jobs, that we are to a large extent also capturing fewer jobs being advertised, being created. Now let me go back to my to where I need to be. Okay. So I don't have that much time. So let me now say a few words about skill breakdown. So here in the UK, there are 4 primarily levels of skills in job statistics. We take the highest 2 as marking high-skilled jobs, the lowest two as denoting low-skilled jobs. And if you just look at the raw data, you see a decline in job ads for high-skilled jobs. And if we repeat our exercise, splitting jobs by high skill and low skill, so that basically means that on the left-hand side, we only have job postings for high skill jobs versus just low skill jobs, you see that all the action is on the high skill front. And the magnitude is slightly larger. It's about 3.8% decline for one standard deviation increase in barriers to professional services. If we go sector by sector, so if we consider these barriers sector by sector, you see big increase in financial services, big decline in job ads in financial services. In engineering, remember, engineering is one of those industries that is potentially highly affected, in information services and in legal services. And here you have 5 columns because we add controls one by one. Next, we zoom in on financial services. So financial services are important in the UK. They account for more than 40% of exports to the EEA. And they are heavily reliant on the passporting that was mentioned in the question, which basically means that within the single market, and financial business from any country is authorized to operate freely in any other member state. And this was a big part of the discussion with the financial sector saying that if we lose the passporting rights, this is going to be a huge blow to us. The alternative to passporting that was being discussed was so-called equivalence, which meant that regulations in the post-Brexit Britain would be considered by the EU to be equivalent to the EU regulations, and therefore British businesses could be operating there. But there are 2 catches with that. One is that this equivalence can be revoked at a short notice, basically at any time. And second, that the whole point of Brexit is regulatory divergence, at least according to people in the Leave campaign. So if you have to follow EU regulations, why even have Brexit? Right? The other thing I want to mention that financial services are not just in London, that 2/3 of financial services jobs are based outside the capital. So if we just zoom in on financial services, we can do it slightly more detailed way because we still use the OECD index, but for financial services, we actually know regional exports at the regional level. So we are better able to bring those potential restrictions to the level of our localities. And, obviously London is the most exposed, but Edinburgh, Skipton, Halifax, which are homes to building societies, are also very highly exposed. And when we repeat our exercise just for financial services, ignoring all other professional services sector, we find the same message. Very robust negative coefficients with magnitude very similar, decrease in postings of 3%. Now, when we try to unpack it further by looking at development in terms of time, it's the same timing. It's second quarter of 2018. So this is the publication of that white paper, which explained the vision for post-Brexit Britain. And if we split into high skill and low skill, here, when we focus on financial services, we also see an impact on low skill jobs. And that echoes, for instance, the current discussion about what's happening in the City of London, where restaurants and bars are suffering because there are no more bankers in this heart of the city going to work. So we think this is not impossible. If we look explicitly at different occupations, you see big effect on managers, directors, professional occupations, associate professional technical occupations, sales, skilled trade occupations. So many of these are, particularly the top 3, are highly paid jobs. And the magnitude...
sorry to interrupt, just you have 2 minutes.
Yes.
2 minutes.
So, and in terms of magnitudes, decline ranges from almost 6% for sales and customer service occupations to 10% for managers, directors, and officials for 1 standard deviation change in exposure. So in 1 minute robustness check, we see that excluding London does not do anything to our results. We control for shares. This speaks to the literature on shift share instruments. Our results are robust. We use alternative definitions of tariffs. We control for tariffs on intermediate inputs and import competing products. For NTBs, our results are robust to that. So to conclude, I've tried to convince you that UK areas which are more exposed to future barriers to services exports to the EU experience a substantial reduction in online job ads after the referendum when compared to less exposed region. This was particularly pronounced for financial services, for skilled jobs, and for professional occupations. And we do not see much impact when it comes to tariffs on goods. And our results are robust to controlling for exchange rate depreciation, migrant present. So thank you. Let me stop here.
So thank you very much, Beata. So now we have 15 minutes of questions and answers. So for the attendees, please feel free to post your to use the raise hand functionality, and then I will call your name and you can then ask your question. In the meantime, while we are waiting for people to raise their hands, Celine had a question.
Hey, thanks Beata for this great presentation. Do you have any data on the UK services exports to the US on the same period? Because we could think that part of the decrease in service exports to the EU can be compensated, at least in part, by more exports to US. But given the great uncertainty in US trade policy on the same period, I was wondering how this could contribute to your overall negative impacts, not just Brexit, but US also.
US, this is an excellent question. So obviously data on exports to the US exists. I haven't heard of explicit measures being applied to British exports of services to the US. So in that sense, I don't think there was a policy change, but there's a question whether there is kind of reflection, right? Whether
exactly. Also with China, because of the trade war between US and China, I was wondering if all exports of
so here, you know, you need to remember these barriers have not happened yet.
Yeah.
So this is kind of preemptive movement, and there are data indicating that, you know, dozens of UK financial businesses have relocated part of their activity to the EU, to the continent. But in a sense, you wouldn't expect yet a big decline in exports of services because these barriers are not there yet.
Exactly.
Right? They will be applied only from January.
Okay.
If there is hard, I mean, presumably there will be, because obviously the decision has been made to leave this single market. So some barriers will be there. The question is, what form will they take? And that's being negotiated still.
Okay, then Marcelo had a question. Marcelo Olareaga.
Thank you, Beata, for the presentation. I have a question on exactly the slides. You're reading my mind, the slide you have posted here. So you have this data on movements in and out of employment. I'm not sure whether this data, you can use the sector information on this data.
Unfortunately not.
Okay, so you don't. It's not at the individual level. You don't know where the person used to work and where he gets.
So these are aggregates. So what we have access to, and these are graphs that we just added this morning.
Okay.
So these are aggregate statistics. Yes.
So so otherwise my suggestion had been to try to do this at the impact on unemployment or employment in each of these sectors rather than online job posting. But if it's not possible, it's not possible. The one thing that, if I read correctly these figures, it seems that employment was increasing during that period in those regions that were more exposed, or am I wrong?
So there is work documenting. There's a paper saying that in areas which potentially are going to be hit by Brexit, firms refuse to invest in physical capital and they substitute labor for physical capital.
Okay.
And that leads to lower labor productivity. So that's one explanation. And also remember that immediately after the referendum, UK is still recovering from the global financial crisis. So that recovery is still on the way.
Okay, thank you very much.
Okay, then Laszlo Halpern has a question. So Laszlo, you can now unmute yourself so you can ask your question.
Yes, thank you for the presentation. And let me just get back to my question, in the sense that it would be nice to see that whether your constructed measure is able to explain what is on top of the investments. Say that if there is a decline in the investment into the sector, and then this is somewhat differing what your constructed measure is able to explain, that would be really something to demonstrate that these two effects are somewhat not related to each other. So that was the direction of my question.
So investment in physical goods, in physical capital.
Investment into the firm. I mean, whatever, to set up a firm and into physical capital or other type of buying in non-tangible capital whatsoever.
So that would require firm level data.
No, local level, regional level.
Regional. So we have to, yes. So I guess we wouldn't have the same granularity of data. So we could try it. One difficulty is that investment figures at the level of travel to work area are probably annual, and the referendum happens mid-year. But but presumably we could do that. We could see if we have. No, that's a good suggestion.
Okay, and the other that it might be the case that perhaps the structure of the demand is changing over time around that period what you are observing, in the sense that perhaps the postings are not behaving in the same way as used to. So that's why that was the aim of my first question, that if you are able to observe the duration of the posting, whether it has any structural change in that period, that perhaps could also be useful to your analysis.
But I mean, why does duration of posting matter? I'm not sure I follow.
Because it may mean that perhaps shorter or longer period is used for fulfilling the job. So
you're saying, but that would be capturing perhaps some supply side effects, right?
Well, but we don't know yet. We don't know as yet whether there is any change in the structure of the labor market, how the demand is formed.
Duration
around this period.
Yeah, so that's interesting. Our thinking was more that the changes to the supply side would come through availability of EU migrants. You know, there are lots of anecdotes about EU citizens leaving Britain. And, you know, we haven't found much action there. Yes, but yeah, as far as I understand, we cannot capture the duration of the posting.
Okay, thank you. Julia Cajal had another question.
Thanks, thanks, Monica. Beata, so a tiny question following up on something that Laszlo introduced. What I was wondering, rather than investment, was whether you have information on kind of the share of active multinationals in commuting zones, to try not that much to understand the investment side, which I think was Laszlo's point, but to understand whether this is coming from multinationals reorganizing production in and out, and that might be in and out of the UK, rather than kind of domestic firms who might have a harder time doing this kind of reorganization. And the other question that I had was on interpretation, and it's whether the results you're showing on high skill and low skill are to be interpreted along the lines of kind of differences in the costs of hiring and firing people across different occupations. Like it might be super costly to get rid of a CEO in 3 months' time, but it might be relatively cheap to get rid of, I don't know, some worker in a low-skilled occupation. So my question is whether the takeaway of those results is connected to kind of costs of hiring and firing people across different occupations.
So the way we are thinking, I don't know if that's this absolutely correct way, was that services industries primarily employ skilled people. And that's why we see, when we look at all professional sectors, we see impact on skilled jobs. The unskilled jobs, we think of these as, you know, local community that provides services, you know, to big office buildings where the services jobs are located. So City of London and pubs and restaurants and other shops. That's how we were thinking about this. And, you know, obviously, if banking sector is doing well, they are building new buildings. So construction sector would also see an increase, and retail sector and so on. On MNCs, you know, we don't find effects on production, right, and manufacturing. So that's why I wouldn't have much hope if we split this by MNCs and not. I mean, what we are thinking now is, could we, if we looked at job ads in those sectors on the continent, should we see the impact? So should we see that these jobs are being, in services, are being advertised in, you know, in Paris or in Frankfurt? We haven't quite figured out what's the best way of looking at that.
Yeah, so just to follow up on that, I was wondering whether you could do something like, this is maybe for a completely different paper, but whether you could do something to assess whether this is a zero-sum game. So what's being lost in the UK, it's been gained on the continent. So we, in the news, we see the articles about financial firms relocating the jobs to Frankfurt, or whether the uncertainty, there is uncertainty everywhere. So the pie is shrinking for everyone. So I think that would be interesting if you could say something.
I mean, we are trying to go in that direction. We are trying to think about, you know, what's the best way of doing this, right? Should we be looking at all banking jobs in France, or should we be just looking at cities or at, you know, Paris? So we're trying to figure out the best way of dealing with that. But yes, that's where we're going. Of course, so the effects would be smaller, presumably, so we may be much harder to detect.
Okay, so we are almost out of time. Are there any other questions? I don't see any raised hands in among the attendees. No questions among the panelists? Okay, so thank you, Beata, for this super interesting and stimulating presentation. Thank you to all the panelists and attendees for participating and contributing to the workshop. Thank you also Nadine Clark from the CEPR for ensuring in the background that the logistics are completely seamless. We look forward to seeing you all for the next iteration, which will be on November 9th, where we'll be delighted to welcome David Atkin from the MIT. Please know that there has been a change in the schedule. So the Laura Alfaro's seminar has been postponed to December, so the next one will be November 9. So thank you, everyone. Keep safe and healthy, and see you in November.
Thank you very much, and huge thanks to Nadine. Bye.